run a portfolio called the inflation deflation economic cycle model. And the model told me to get defensive starting in January. And the reason why I got defensive in January, because I thought we would enter a period of disinflation and then deflation in the second quarter of this. But most importantly, highlighted with a period of very slow economic growth, slowing economic growth dramatically. Mm-hmm. So the latter part of that hasn't changed, but the former part, the disinflation morphing to deflation, has changed. But it's not inflation that's engendered by a healthy economy. It's inflation engendered by bottlenecks and more supply chain disruptions because of the war in Ukraine. So the short answer here is yes, we are very much prepared to being defensive. My clients know this, and we have the performance to prove it. It's paid off for us in that we haven't lost anything close to what the Dow, the NASDAQ, and the S&P are down. Not anywhere near in the neighborhood of Ms. Woods and her disruptors. The only thing she's disrupting is retirements. and I don't mean to. I hate to highlight that, but you have to do macro. You can't just say I'm buying some high beta stocks with promising earnings in the future when you enter sectors 1 and 2 of my spectrum, IDEX spectrum, which is a slowing economy and one where inflation will be eventually slowing, maybe even crashing in the later portions of this year. Because if it wasn't for Russia invading Ukraine, I believe oil prices would have been already way below $80 a barrel, as opposed to $100 a barrel, which is keeping, wheat is, I think Ukraine exports 25% of the world's wheat. Russia is a huge exporter of energy. I think it's 12% energy. So yeah, we're having a lot of stagflationary conditions, but the crucial point is we are slowing rapidly in terms of GDP and earnings, and that is not at all in the minds of what I call the deep state of Wall Street, who is like the Tom Lees of this world. It's like, hey, every day is the bottom, and a good day to buy. Mm-hmm. You have to do macro. You have to understand the rate of change of inflation and growth and invest accordingly. Otherwise, you're going to end up like Miss Woods. And I don't want to lose half of my assets under management or half of my retirement savings personally because I don't understand the rate of change of growth. Well, Mr. Pento, inflation is 7.5% year over year. And I know that, I'm aware of that. I think it could go in February. We have a CPI print coming up in a couple of days now, or maybe a week or so. I think that inflation print could be 8%. So why in the world are you talking about disinflation and deflation? Are you a complete moron? I might be a moron, I'm not a complete moron. I will tell you this, what causes disinflation and deflation is going to be the same thing that always causes it. It's a seizing up of the credit market. Mm-hmm. And I see a very salient risk of a complete shutdown in the junk bond market and the commercial paper market, the banking system, money market accounts, everything but the repo market, because the Fed has this stupid, standing repo facility. But even if they do, and they do have a standing repo facility, that doesn't ameliorate the issue of a crashing stock market, a crashing real estate market from a freeze of the credit markets. What would cause a freeze in the credit markets? I know that was your next question. Well, the Federal Reserve is going to be the most hawkish Federal Reserve on a rate of change basis in the history of the Federal Reserve. What does that mean? They're going to go from printing $120 billion towards the end of 2021 to printing zero on March 11th. I got the Treasury refunding data, so I know public information. That's it. The Fed is not going to purchase any more treasuries or mortgage-backed securities in just a matter of about 10 days. Okay, that's a pretty big rate of change. Then they're going to go from 0% interest rates to something close to 1% by July. That's another big change. Mm-hmm. But the biggest issue is the Fed is going to once again enter into quantitative tightening. And they have a $9 trillion balance sheet. Mm-hmm. They're going to be selling, according to what I've researched, determined they will be selling about $80 billion a month or more, $80 to $100 billion a month of primarily mortgage-backed securities because they want that $2.7 trillion of MBS off of their balance sheet. They only want a balance sheet consisting of treasury. Well, if they're starting to dump $2.7 trillion of mortgage-backed securities, they're going to absolutely surge the cost of home ownership. Mortgages are going to go through the roof. Mortgage rates are already rising rapidly. They're going to go up much higher. And the reason why the Fed is going to have to do this is because they understand that the lower middle class and the poor amongst us Americans are heading into penury. They cannot afford their rents anymore. Owner's equivalent rent is up 20% year over year. In reality, that's probably closer to the real rate of inflation. 20%. They're killing the least vulnerable. The most vulnerable amongst us, the least willing to be able to handle inflation, are getting wiped out in this country. And guess who they vote for primarily? They're Democrats. And they put Biden in office. And Biden is going to try to reappoint Mr. Powell, who has failed completely. The man is completely feckless. And I'll tell you why I say it. If you put me in charge of this country's money supply and the purchasing power of this currency, and I destroyed it by 8% year over year, and I was still, as bad as that is, Tom, I was still printing money in March of 2022. What in the world is this man still printing money and expanding his balance sheet when you have 8% year over year inflation, which is a figure probably reported in middle of March, a figure I think. That is incompetence of a massive degree. And the only reason why he's doing that is because he's afraid he might upset some of his friends in private equity. I mean, what other reason could he have?
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where do you start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.